Hello there and welcome back to Dukascopy TV. Euro area investor sentiment deteriorated in July unexpectedly after political turmoil in Portugal once again sparked concerns in the financial markets. Here to discuss the situation is David Smith, founder of Geneva Business Insider. David, thank you very much for coming in today.
Pleasure to be back in again. Thank you very much.
You're very, very welcome. Now, if we talk about Portugal, some analysts are saying back from the brink, but the risk still remains. How would you sum up the situation at present?
Well, I'm not sure it's really back from the brink. I mean, it is still on the brink as it has been for the last couple of years. I mean, if we turn the clock back, I think 2010, 2011, Portugal received a bailout of 78 billion euros and had intended then to be restructured, reorganised and get their house in order by 2013 to re-access the normal bond and monetary markets. Now, what we're seeing is just the fact that the problems are not being resolved, but they're being temporarily brushed under the carpet. If you take a few interesting approximate statistics about Portugal, 60% of the population, working population, work for the government. And you have an economy which is driven basically by services, which are hotels, restaurants, bars, golf courses, and so on. So I don't see what that has to do in any way whatsoever with the 60% working for the government. There is no link between an entrepreneur running any of these little businesses and this huge brake that's put on the economy by the misallocation of resources. So if you look at what has been done, the actual rebalancing of the economy has been minimalistic in terms of what really needs to be done. And you know, if you consider as well that the major source of revenues for all these leisure outlets in Portugal are from the wealthier or formerly wealthier Northern European countries. It's very difficult to see how Portugal, Spain as well for that matter, could ever have a strong recovery. However, I don't work for the IMF or the ECB, and I do actually believe in truthful analysis. So, I mean, all of these numbers that are cooked up and shared around don't mean too much to me.
It's certainly very interesting because they are receiving all these plaudits for being the best behaved in terms of their bailout, you know, getting back on track. But in terms of how real do you think the threat is that this recent debacle really puts them off course for getting back into the debt market in 2014 as planned?
Well, I mean, the 2014 deadline is not the deadline that was planned. It was originally 2013.
The revised,
so
yeah.
I think you have the answer as to how the problem is going to be solved. It will be extend and pretend everything is going okay. In the meantime, of course, they've run out of money, and they have been given smallish handouts of, you know, 3 billion, I think once or twice times 3 billion or something of that order. And we hear Mr. Draghi making the usual noises about get your house in order, reduce spending, increase revenues. It's the kind of thing I tell my daughter, you know, as to how she should behave in the future with no firm belief that it's going to happen. But these are noises that have to be made. For me, the most important thing that's on the horizon at the moment, which overshadows everything else in Europe, is the fact that there's a German election coming up in September. So there will certainly be everything done to prevent any kind of ripple appearing on any waters anywhere in southern Europe, at least until those events are over. And if the cost of that is throwing a few 3 billions here at Portugal and a few, I think, 12 billion at Greece to keep them shut, you know, keep their mouths shut and keep the noises down, then they'll do it.
Well, that is something that I was wanting to go on to, David. I mean, the Eurozone sentiment did unexpectedly decline for the first time in 2 months, which I alluded to earlier on. We've seen something similar with Italy earlier on in the year. So with that in mind, once again, has it left the rest of the Eurozone exposed, would you say?
Once again, I think the central issue to everything in Europe is that nothing has been resolved whatsoever. And if you get a fluctuation in sentiment from one month to the other, you talked about games instead of saying gains, and I think you're closer to the truth in that choice of word. It does not mean very much. You know, the situation in Italy is precarious. The situation in Spain is very precarious. We're seeing street riots in riots is a big word, demonstrations, should we say, in Portugal. And basically what this message is transmitting is that the people in all these countries are extremely disgruntled about the way in which their own political elites are running things, and probably equally disgruntled about the fact that these political elites say everything is going fine, when basically things for the ordinary individual in the population are getting worse on a daily basis.
They're really struggling there. I mean, you mentioned what Mario Draghi's guidance, if you like, saying to Portugal to get the house in order, but do it in a way to encourage growth at the same time, you know, lower the taxes, and gave a few different points. But do you think he's just trying to keep it all kind of hush level because of these elections which are coming up?
I think he's giving the usual central banker's speech. I mean, if you look, as I say, at a country which has got 60% of its working force employed by the state, the obvious thing to do is to take state pensions down 10% and cut state employees by 10% immediately. So that would have an effect. You know, the measures which would be painful and unpleasant could be done. But, you know, the trouble is state employees know where a lot of the skeletons are in the closets. So politicians certainly do not want to rattle that cage. And when you get to a point where the state employees are the majority of the voting population, it's a guarantee that if you try to threaten their interests, you're going to get voted out of power. So you are looking at situations which are fairly intractable and difficult to solve. And Mr. Draghi is an extremely smart man. I do not underestimate him one little bit, quite the opposite. But he's a very dangerous, manipulative man at the same time. And he knows exactly the choice of words to make to come into a meeting and walk out and leave the press there with a few notes to take down and put into their headlines the next day without having said anything meaningful or done anything meaningful, or being able to translate banker parlance into actual reality for the ordinary person living in any particular country.
It does seem very interesting. We'll see how these situations unfold as the days and weeks go on. But David, thank you for sharing your perspectives on this matter. It's been a pleasure.
Pleasure, thank you very much.
Thank you. Well, that's all from David and myself. Don't forget, today we have the Commodities Corner looking at copper and aluminium. So please do click back to Dukascopy website for that. Goodbye for now.